anytime you buy a pair of Jordans, you will be able to deduct that on your taxes because that would be a marketing expense to your business because now you're repping a brand that endorses you.
Give me 5 things content creators don't know that they could write off. Like you mentioned a few, so if you want to repeat them, I'm cool with that. But give me 5 things that content creators and personal brands don't know that they could write off.
Got you. So I'm gonna give you more than 5 because I'm here to rock.
Oh, talk about it. I'm here for it.
So the first thing that everybody needs to know is when it comes to write-offs, the tax code says you can write off any expense that is ordinary and necessary for you to operate your business. Say that one more time. You can write off any expense that's ordinary and necessary for you to operate your business. Now that's a pretty vague definition. So it's kind of up to you to make that expense ordinary and necessary for your business because it leaves us a lot of room. So when as a content creator, if you go buy a camera, obviously you need that for your business. So that's ordinary and necessary for operation business. That's an easy one, right? But like you can also buy a drone, right? And as long as you can use that drone to shoot content and help you become a better content creator, you can write that drone off on your taxes as well. Another one that most people don't know is your Apple Watch. Because you can check email and check your schedule and respond to text messages on your Apple Watch is deductible as well. So it's really about like, how can I make this expense deductible in my business? So another fun one for content creators is that if you have, because content creators have brand partnerships, right?
Yep.
So Nicky, if you just so happen to have a brand partnership with Jordan, right? Anytime you buy a pair of Jordans, you will be able to deduct that on your taxes because that would be a marketing expense to your business because now you're repping a brand that endorses you. So every time you wear a pair of Jordans, it's a chance that somebody's will click the link in your bio to go to the Jordan store, and that is a way for it to make you money. So as a content creator, if I'm you, I'm like, how can I get a brand deal with some of my favorite brands that I'm going to wear anyway? That way, when I wear their clothing or when I wear their products, it's a marketing expense for me because I'm marketing a brand that pays me. So it's really
Jordan,
about...
call me. Jordan, call me.
I'm telling you. That's what, again, like that's why it's so dope being a content creator because like you have no ceilings when it comes to like tax deductions because the IRS tax code was not like prepared for this wave of new entrepreneurship and this wave of content creation. So now it's getting very, very easy to deduct things that the IRS normally wouldn't see as deductible. So like, for instance, you can write off clothes as long as that the clothing has your logo visibly stitched or pressed on the garment. So like I'm wearing my Melanin Money hat and I own this brand. So anytime I buy something from our store, it's tax deductible expense because I own some of the company, right? So if you go buy a hoodie, just go stick your logo on it. And now not only is the hoodie tax deductible, but the logo stitching cost is tax deductible. And every time you take that hoodie to the cleaners, it's tax deductible as well.
I know there's a lot of buzz and it got a little publicity, but not much. And I definitely want you to add your creative spin on this as well. But this concept or this headline that the IRS hired 80,000 new, employees or whatnot. How do you think that will affect content creators, small business owners, Black and brown people alike? Should we worry about that? Do we not care? Like, what does that mean for us as we prep for next year's taxes?
Yeah, so it's crazy. So when the news first came out, they were like, hey, we're hiring 87,000 IRS agents. Well, first of all, they're hiring all these IRS agents because they fired them all during COVID. So like, that's first and foremost. So they're hiring a lot more back because they're understaffed. And when they came out with this, they first said that they're going to be targeting high net worth people. So making, anybody with a W-2 over 400,000 or any business owners in the millions. Then they came back and said, well, actually, we're going to focus some of our attention as well on entrepreneurs making less than 200K. So that's when I was like, okay, they're actually targeting starting out entrepreneurs as well. And all that I would say you need to worry about is like, as long as you have your stuff in order, as long as you have your documents in order, you have a bookkeeping software, you're tracking your expenses, you're tracking your income, you have nothing to worry about. The only people that have something to worry about is those people that are running their businesses like it's a side business, like, having all that money coming in and out of their personal account, accepting cash, using Cash App for transactions. Like, if you're running your business like it's a by the way thing, then yes, this is something you should definitely worry about. But if you're doing what you need to do as a business owner to make sure your business is set up properly financially, you're fine. So for anybody that doesn't have their stuff together, like, this is the time to get you there. This is like the red alert that, hey, if you don't have that business bank account, get it now. If you don't have a bookkeeping software, I would get that now. And if you don't have your LLC established, I would do that now. And so for me, I think it's a wake-up call that business owners needed to hear anyway.